Morning and welcome, Petro Radio News Hour. Joe and Jason. Jason will be joining us here in a little bit on this Friday. Man, it's been the year of chaos. It's lived up to the billing, but we are seeing a complete collapse here on Wall Street. The Dow now down almost 1,000 points, 937 points. The S&P down 144. The NASDAQ in correction territory now, down over 500 points. And Japan started last night. The worst sell-off, well, the second worst sell-off of all time in Japan, going all the way to Black Monday, right? 1987. Remember, that was kind of the peak of, I guess, the run for the Japanese. Remember, their stock market, it took all the way to this year to get back to where they were in 1987, and now everything's starting to fall apart here. We knew this was coming. We just didn't know when it was coming. But again, this is why we keep talking about getting ready. You know, this boom and bust cycles, all of these central banks printing all of this money, got to sell all the debt, got to protect your currencies, and, well, chaos is what ensues. 800-951-0592. That is our toll-free number. Gold and silver. It's going to be the one thing. I mean, there may be a few things, but not very many. But gold and silver will be one of those things that you can protect yourself from. We talk about being diversified. I can't tell you how important it is. allamericangold.com is the website. We had earnings last night from Amazon and Apple. Not great. Matter of fact, Amazon today down 12% right now. As listen, they're telling the same story everybody else is telling. Hey, sales are down. I mean, consumers are trading down. They're buying cheaper stuff. Why? Well, because they can't afford the more expensive stuff. Apple was a little better, not great. A lot of problems emerging out of China for Apple. We kind of noted that a few weeks ago. And Intel. No, we talked about it yesterday that there was going to be job cuts. They're swinging an even bigger axe today. They're going to cut 15%. And actually, I'm hearing today maybe more than 15% of their jobs, 15,000 to 20,000 jobs. Intel down 28% right now. And Jason, it's starting to set in here that there's been another big leg down in the economy globally, not just here. We had the jobs number today, and it was just as I was worried about. I said, how low in the hundreds will it be? It was only 114,000, well below expectation. But that unemployment rate, I warned about it yesterday, Jason, all the way to 4.3. So we went from 4% to 4.1. Now this one, 4.3. And the fact of the matter is, have we entered that stage now where, if you get laid off, are you actually going to be able to get another job? And a lot of indicators now, recession indicators, the SOM indicator, this thing's been around for a while, about the unemployment rate, and it's been accurate 100% of the time, saying, recession's coming. Jeff Gundlach said recession's coming. He was talking about, hey, we're going to be in a recession by September. And Jason, all of a sudden now, a big sell-off happening pretty much all over the world today.
Yeah, and then if you add a little bit of political season and geopolitics to it, then, it gets.
I think we lost Jason there a little bit. I don't have him. So we'll see. We'll see what's happening Jack, help me out. I don't know which one of us. Did I lose you or did we lose Jason?
Yeah, he dropped off. We're trying to get
he
back.
He dropped off.
Back
okay.
On.
All right. So Jason dropped off. We got a little technical difficulty there. We'll work on that. But it is something where when we're watching this sell-off right now, we're starting to see the cracks in the armor, right? The Magnificent Seven now. I think, what do we got? I think NVIDIA is the only one left now to report, and all the rest of them are just struggling. They're just struggling to live up to it. And then if you're not the Mag 7, well, let's just face it, you're just struggling. And that's kind of what we're hearing all over the place from bankruptcy filings. We're seeing a huge surge in the bankruptcy filings, and now we're starting to see it in the jobs number. They also revised down June's number. Remember, June's number was over 200,000. Now they said 175. Coming in this time at 114,000. Big jump up in the unemployment rate. And even the household survey said, hey, we don't think there's even that many jobs. About half of them, about 67,000 in the household survey. The birth-death model, by the way, added 267 or 246,000 jobs. So to get to 114, they said, hey, we think, we can't prove it, but we think 246,000 jobs got created somewhere. Yeah, that's what's got the market in a big panic today. Patriot Radio News Hour will be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour here on this Friday. Right now, the Dow is down 925 points. Finished down about 497, call it 500 points yesterday. The S&P, one of the worst days in a while here, down 140 points. The NASDAQ down another 500 points. And really, I was expecting Apple and Amazon to be better. Right, this kind of got everything off on the back foot when both of those announced yesterday. Disaster in the bond markets, the 10-year note all the way down to 381. Are you kidding me? 381 on a 10-year note. And, of course, remember, the bond market's been saying, hey, something broke. Something broke here. We're worried. Sell off everywhere. Crude oil down almost $3 a barrel. Gold was right up at their all-time record high again. They got to $24.78. Heck, it was $24.78 about 45 minutes ago. Right now, gold down as well, 2,410. Silver's down 50 cents. Just below $28. And this is just going to be, listen, they're going to find anything that they've made money on, look for them to sell it today to offset some pretty big losses here. But, Jason, we've been talking about the volatility picking up. We've been telling everybody, listen, this is the cycle, whether we like it or not. They put us in this boom and bust cycle. That's where we live. The problem that we have is the answer every time was spend money, lots of it. Right? We're already $35 trillion and counting. And we're starting to choke on it. And this is why we keep telling you about why refi. You can lock in to 10.25% fixed rate of return. If you want to lock in for 5 years, you got to have a minimum of $50,000, but it's not correlated to Wall Street. Right? When the bus comes, and Jason said it a lot. Hey, when the bus comes, it's going to be tough. How many years is it going to take? Because of the fact that, hey, printing money is just going to make things worse now, right? I think we finally got to the point, okay, how much debt's going to be too much? I think we're figuring it out. Check these guys out. This thing is coming. There's no stopping it. It's not even a complicated problem. It really isn't. Lowering rates a quarter of a point in September is not going to save it. That's not going to get it done better. Right? It's crazy. Now they're talking about, Jason, they may have to cut every meeting for the rest of the year. That's what the guys on TV are saying. I'm like, okay, right? Year of chaos. You're preparing for what comes after it. Why refi? Great fixed rates of return. What does fixed rate mean? It means it doesn't change. But what if the Dow goes down 1,000 points? So what? Doesn't care. It doesn't care. What if the Fed does this? What if the markets do that? What if this? It doesn't matter. If you've got $50,000 or more, you can use an IRA. Here's the other cool thing. You can use it as income, too. Yeah, if you want to. Supplement your Social Security. You can compound it. You can do whatever you want. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. But, Jason, it's been a tough day. It was a tough day yesterday, kind of a tough week. And now we're starting to see all of a sudden a big change happening in the jobs market now. Hey, okay, 100,000 jobs. Well, it's only 100,000 because the birth debt model, we made up 250,000 jobs to get there. That unemployment rate, I was talking about it yesterday. If this continues, how fast does it happen? I think Intel, very shocking to see a company like Intel down 30%. Amazon reiterating what we've heard from all the consumer staple companies, right? The consumer it's in trouble right now. Hershey's had terrible earnings. I'm expecting a lot more job cuts coming in the very near future.
Yeah, what's funny is in the future when this stuff goes on, like Amazon, usually one of the things you do is you fire workers, right? Well, with all those robots in the warehouses, what do you do when you don't have as many people to fire? I guess you could shut your robots off, but that's not going to save you as much as a wage slash, right? But no, Joe, that's a lot of big companies you just mentioned. It's when the big companies start to fall, right, Joe, is when you start to see the markets really move. And just like clockwork, and I had some technical difficulties, but yeah, suddenly here we are, late July, early August. Now Israel's getting really serious. Didn't happen 2 months ago. Didn't happen 6 months ago. No, it looks like it's happening now. And so August 12th and 13th, if you want to believe the intelligence reports that they're reporting to the news, Iran's going to attack on the 12th or the 13th, which that gives us 1 week. If I had a whole bunch of money in the markets and I thought things were going to move, and all the stuff you're talking about, Joe, in the markets, and then you see the geopolitical stuff, gives you a week to move your stuff, doesn't it? So we may see an entire week of sluggish and failing markets next week, Joe. I don't know if it'll be a panic sell because I don't think the news is that bad yet. But what happens if we open up the next week and suddenly things are blowing up, and all around Israel, and that could be the catalyst, right, Joe? That could be the match, right? And we'll see. We'll see. They always have something to mask the economics weakness that's already in the system. And Joe, it's just the stuff you mentioned today is you have to look at the market the last 2 days just to accompany the information. It's getting pretty serious.
Yeah, right now down 975.
I saw that.
Amazon, like I said, their stock, it may be down more now, was down 12%. Earlier today and there's the CEO just saying, hey, listen, here's the thing, we're still growing, right? Amazon, right? They're cheap, right? So they're still growing, but he goes, listen, they're just not buying like they used to. They're buying the stuff that's on sale. They're buying all the cheaper things, which of course we, normally, right, the expensive stuff, right, that's where they make their money, right, the higher, bigger profit margins. But I think it's the speed here. Something broke this summer. Something broke. And yet you're still out there. If you're out there, you're like, well, wait a minute. Hey, the places are still crowded and people are still out there. But it's different this time, and you can sense it. Everybody's spending less, right? They're out of money. We talked earlier this week about the credit card delinquencies, the auto loan delinquencies. And the problem is the New York Fed is saying, hey, these delinquencies aren't 30 days. These delinquencies aren't 60 days, right? These are 90, right? So not only do they, once they go delinquent, Jason, it's almost like, gosh, let's just say they stop paying in August. The realization is for a lot of these banks now, they're realizing, a lot of them, well, you missed August. They're missing September. They're missing October, right? It's not just a single, okay, you had a bad month, but next month you're back making a payment again. What they're noticing when it comes to the consumer, once they start missing, they're not coming back, and it's not getting better. And I think this is really putting a lot of pressure now on the stock market as we've had this AI boom, right? It's AI this, AI that. Well, guess what? That isn't going to change the situation on the ground, right? AI, well, it can pass the bar exam. That just doesn't make a difference, right? And I think this is where we're at. This is what we're dealing with. I am very, very much a little surprised at how quickly things change. But again, how many times have we said it? It's gradual, and then all of a sudden, things change. We'll see if this is it. Jason's talking, hey, look out for August 13th. We're going to have some type of response with Israel and Iran at that point in time. We'll see what happens with the market sell-off. Can it come back? Is it going to stay down? I still think Japan is very worrisome. The worst day going back to Black Monday 1987, and I think we're going to see a lot of readjusting in the marketplace and reevaluating exactly how strong is the global economy, how strong is the U.S. economy. And then, of course, ultimately, at the end of the day, if things continue on this trend, we're going to see deficit blowouts. We're going to see deficit blowouts in Japan, deficit blowouts in Europe, deficit blowouts here in the United States. And we already know, remember what Bank of America said just 2 weeks ago, we're one shock away from the U.S. Treasury market not operating properly. And again, we've got the treasuries acting like meme stocks here. It's incredible how quickly things change in these markets. And it's not supposed to move that way. It's not supposed to work that way. But I think it's a lot of people being very nervous, and rightfully so, because the real smart people, they know the rules. It's most of the regular people that don't know what's happening and what is going on. I'll go back to Stellantis, right? They're in big trouble. They're talking about sales of vehicles, their best-selling vehicles, the Jeeps. They're down 20%. That's the best one they've got. They've got certain sales that are down 60, 70, 80%. It's incredible. This is very broad-based. And I think we'll wait. You know what? It'll be interesting what we hear from Walmart and what they will have to say. I think that'll be the next indicator. My guess is Target's probably not going to be great, right? Just looking at what we're seeing here. Then Kroger will be the other big indicator still left to come. And then NVIDIA. If NVIDIA, when they release, if they're worse, if they're in line with what we've seen from the rest of the Magnificent Seven, I would say get ready here for a major correction. Right now, the NASDAQ in correction territory, which means the NASDAQ is down 10% from the highs. The S&P and the Dow aren't there yet. So we'll continue to watch. Are we going to see a 20% correction? Remains to be seen. But it does look like it is very, very possible that we're going to see a change in this direction. I think we're going to see a rate cut now. The odds of rate cuts jumping dramatically. It'll be interesting to see. Will the Fed, Jay Powell said it at his press conference, if the data was worsening, that they would not be beholden to the election by, hey, we'll cut in September and then wait. And I've been saying 2 rate cuts this year. September, December, after the election. We'll see if is it going to be more? Are we going to need a rate cut at every Fed meeting? We'll see. Patriot Radio News Hour will be back after the break. 800-951-0592. If you're just joining us, the Dow down just under 1,000 points right now. The S&P's down 130. The NASDAQ's down 465. This follows yesterday's dismal day. But we've seen the volatility, Jason, really pick up in the last 2 weeks. And we kind of said that's kind of one of those early indicators that things are starting to change. And these CEOs now, this has been quite the earnings season with almost universally across the board. The CEOs are saying, man, there's been a change. There's been a change. Layoff announcements spiking. And now we're starting to see companies that, like an Intel, we're shocked to hear how bad it got and how big the cuts now need to be. And I think this kind of what happens. They live high on the hog and they think, oh, it's just a blip. And we're going to keep everything the same. And then all of a sudden, kind of like what we talked about with the consumer. Oh, I missed my payment. I missed my payment in August. But the bank, well, don't worry. In September, they'll catch up. And then September comes, they miss it again. Well, okay, well, in October, right? They'll catch up. And then they miss it again. I think now we're seeing all of these CEOs and CFOs going, uh-oh. They didn't come back. And now we're starting to see the axe come down. We saw it in the jobs number today. We saw it in the unemployment number. And then when you start hearing these earnings calls, man, you just got an indication. It just seems like a lot more people are going to get laid off here in the next 30 to 60 days.
Yeah, I think the 90 days is kind of the severe one, isn't it, Joe? That's kind of where it seems like people are just dropping off, permanently. Hey, we're just not paying. 30 days, like that could just be... You just, if you're somebody like me that still pays with paper. You had a bad
month. Something right. You got squeezed.
But yeah, that could be forgetting to send your bill in the mail, Joe. I'm one of the few that still does paper billing. If you don't send it out just because you lost it in the pile, 60 days. That shows that's not a mailing thing. That's not that's hey, I can't make the payment. But 90 days, I think is where these are people that are just done. They're done, right? So when those 90-day delinquencies, when I saw those have been getting severe for a couple of months now, Joe, and they're just getting worse and worse. So that's a big number. That's one of the ones you want to look at because that's people saying we're done. Just can't do it, Joe.
Yeah, and then that's a permanent change, isn't it? Right? That's the I can't pay the credit card. Right? Well, what's next? Well, I can't pay the car payment. Right? Well, what's next? Well, I mean, pretty much you're down to rent. Right? I mean, this is going to be an interesting situation as we watch this play out. But again, I think the unemployment rate is going to be something to watch. And then, of course, tax collections. What's going to happen there? Already, they were telling us, hey, we're going to have to borrow another, $1.5 trillion. We're going to be closing in on $37 trillion on inauguration. But if we enter into a recession, and all of a sudden now, okay, tax revenues start plummeting like a rock. Jason, now all of a sudden, now you got that debt crisis, right? The Treasury's going to be stuck saying, oh my gosh, we got to issue 150, 200, 300 billion dollars in new debt. And at the same time, everybody else has this debt as well, and there's just not enough buyers to go around. You got to remember, who buys a lot of debt? I'll say this. Apple buys a lot of debt. Amazon buys a lot of debt. NVIDIA is going to buy a lot of debt. Why? Because they don't keep the money in the bank. They're not dumb. So, hell no, we're not going to keep the money in the bank. And Jason will continue to watch it here, but not a good week for Wall Street. But I think next week's going to be important. We're going to learn a lot next week. Are we going to see follow through here on this sell-off, or are the markets going to be able to stabilize themselves? I think that's going to be next week's probably a very important week, at least for equities. In the scheme of things, it's coming one way or another, but next week's going to be a big week to tell us how close are we, because we're not there yet. I mean, listen, we still created, maybe we did 114,000 jobs, but Jason, I think next week's going to be a critical week for the equities.
Yeah, I think they're going to go down quite a bit. That's what I see. They're building this thing up just exactly the way that they want, which in my mind, Joe, they're going to try the financial system, and especially in this country, to inflate their way out of this mess. They're going to try to do a whole lot of spending and a whole lot of inflation, and you can't get people to go with that unless there's some huge, massive emergency. Hey, and war is it, right? If that's the play they're going to make, then Joe, if the markets are starting to fall apart now, and they're going to start having a downward spiral for a little while, they get the rate reductions, maybe 2. I say 2. I don't know if they get more than 2. And then if it's like, hey, spend, baby, spend. At times of war, it doesn't matter how much the debt is or the interest on the debt. It doesn't matter if there's inflation. We need to save ourselves and save our partners across the world. And with that kind of spending, the markets could get that artificial stopping of the whatever's going to happen to the markets in the next few months, Joe. And if the markets go sideways or they climb slightly, well, yeah, if you spend $10 trillion, 20 trillion, 30 trillion, 40, what's it going to be this time, Joe? 60 trillion? And what is that going to do to the inflation? I think it was wise, the CEO there of JP Morgan saying that we may see 8% interest rates. Well, yeah, I don't remember the time frame. Did he say a time frame? But I'm thinking he was probably thinking 2025, 2026, right, Joe? Yeah. Can you imagine?
We're talking about a 10-year note right now at 3.8. At 3.8. The only way I see that is it's such a nightmare that, like Jason said, we would have to unleash spending of epic proportions. Forget about a $2 or $3 trillion budget deficit. Jason's talking stuff like, hey, $5 trillion. And maybe we may go $5 trillion in debt in a single year. Do we go $6 or $7 trillion? In that case, right? If we need to issue that much debt, I think J.P. Morgan, Jamie Knight could be right. Hey, at those levels, to sell it all, right? That's the type of interest that you would need. It would just, I don't know. I'm just saying, bank lending has stopped. There was an office tower in New York. I want to say it was yesterday, maybe it was 2 days ago. Sold at a 97.5% discount. What? Essentially, they said the building's worthless. Right? The only thing that had value was the land. How do you take a 97.5% loss on an office building in New York City? Well, it's here. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason after gold was near the highs, all-time highs earlier when the jobs came out. The huge market sell-off occurring really across the world right now. A lot of profit-taking. Gold right now, though, hanging in it's down $23. Right? Believe me, that's more than hanging in there. $24.25, $2,425 today. $20 gold. I'll let you pick it. You want Liberties? You want Saints? Pre-1933 U.S. minted gold. The most private way to own gold. It's so funny because so many people are just unaware of what the rules are. They don't know there's a difference. There absolutely is a difference. There's one type of gold in the whole world, at least in the U.S. You live somewhere else, tax laws are different everywhere. That you can buy, sell, and trade, and I don't have to 1099 you. Guess what? That's pre-1933 U.S. gold. They're $2,675. I'm taking $50 a coin off. $2,625. If you want to buy 20 or more, tell you what I'll do. 20 or more, I'll go crazy here. $2,600 if you buy 20 or more. I mean, that's like $175 over spot. I mean, it's incredible. Buy it. 800-951-0592. $20 gold, Libs or Saints. You can mix them. You can match them. You pick. I don't care. 1 through 19, $2,625. You buy 20 or more, $2,600 at 800-951-0592. And Jason, I think now it'll just be a question of what happens next week. Do we get follow through? And do we start seeing more intels popping up where, hey, we're not, it's one thing, hey, John Deere, we're going to lay off 500 people. That's one thing. But when you have big companies coming out saying we're going to lay off 15,000, Disney is saying they're getting ready to have more layoffs at Disney now. I don't know. These are game changer type things. What happened to Conn's? They had 170 stores out of business. Who was it yesterday? Bobcat, 400 stores going right to liquidation. They're not even, Jason, normally, we're going to go to bankruptcy and then, try to reorganize and then maybe we'll bankrupt again and then we'll liquidate. These companies, they're like missing 2 and 3 steps going right to liquidation. That's how fast things deteriorated.
Yeah, being a part of the radio station and dealing with the local businesses, I met a whole lot of guys, and the ones I've been talking to over the last couple of months, it's what was it, a couple of months ago? It's just like everything just fell off a cliff. Things were kind of okay. I remember, what was it, a couple of years ago? I got so much stuff coming in. I got jobs lined up 4 months out, and then suddenly it's like, I got business, right? And then about 2 months ago, a lot of these guys, it's like a cliff. I think it was after May. Was it after May or just after June? It's after May or after June. It just boom, like a cliff. Everything just dropped off. I think it was just after June, in that time frame.
Yeah, I think in June something happened. Something definitely happened.
Yep. And
I'm hearing the exact same thing, and people reaching out that, hey, I hadn't had to reach out to these guys in years because I had plenty of work. Now the work's dried up, and now I'm looking, I do concrete. Man, I had jobs, and I worked as much as I wanted to, right? How many hours I wanted to work. Now all of a sudden these guys are like, man, I'm calling everybody that I know in the industry because I don't have any work. And, when we look at whether it's housing and how bad housing has been, right? That, these construction jobs, let's face it, If you can't sell a house, you don't build them, right? And I think it's definitely spreading. It'll be interesting to see the pool companies, what they have to say. Are people building pools anymore, right? I think there's a lot to this.
That's correct, Joe. That's correct. And you're talking about bigger businesses with all the layoffs. But once again, if let's just say you're one of those guys that actually owns a business like some construction company, or say you do windows, I don't know, something like that. And the wife, you still need the wife's wages to make ends meet, right? Maybe the business isn't so good in the window business, right? And then she gets laid off. So suddenly the window guy is out there, trying to get jobs that just aren't being available to him, and it sinks the whole family. So yeah, these are these things, man, Joe. It's so interconnected. So when you come out with these numbers, especially the way the numbers have been building, I mean, this isn't like it all happened in the last 2 months when things dropped off for the small businesses we're talking about. You've been talking about these layoffs for like a year and a half. At the beginning of 2023, it's just, it's this company. And then like the next week, it's this company. And then the next month, it's this company. It just seems like it's a never ending, cycle of all these big companies laying off people. And I have a feeling if we looked at all of our shows, Joe, you'll probably start to see second rounds of layoffs for a lot of these companies getting ready to start now.
Yeah, you know what? That's another thing, right? Are we going to see more follow through from this? And it's too early to tell, but this is definitely a big step down, not only in the number of jobs created at 114,000, but how they got to that number with big birth death. And then, of course, the unemployment rate jumping 0.2%. That's a lot in a month. Are we going to see that again next month? Let's hope not. But right now, that seems to be the trend. Patriot Radio News Hour, final segment coming up. 510-592, final segment of the week here. This was a week of chaos, right? It started with the assassination of the Hamas leader in Iran by Israel. Then of course, we got the news out of Japan trying to fend off a currency crisis. Then all of a sudden, all these U.S. companies coming out with their earnings and talking about layoffs and slowdowns and consumer not being able to buy the way they were buying and can't pay their bills. And then it kind of ends today where the worst sell-off in Japan going back to Black Monday 1987, a major sell-off here as a big miss on the jobs number and a spike in unemployment. And Jason, I think probably, at least for me, Intel, a big employer here in Arizona, and the news that this wasn't a hey, we're going to let go of 2-3% of our workforce. A big axe swinging over 15,000, and word on the street that I'm hearing is, Jason, it could be as many as 25,000 by the time it's all done. They have ordered a complete stop now, Intel, with all non-essential workers. So that's going to be, and tons of people, contract work, that's big. That is a big thing. So not only is Intel going to lay off 15,000 of its own workers, but Jason, it's saying all-out stop on all the contract workers. So you throw those in, and all of a sudden you're talking about, 20, 30, 40,000 people just in one company potentially looking for, somewhere else to go.
And these big companies, it's not like they just make these decisions like someone wakes up, it's like, oh, let's just do this. They have metrics in place. A lot of these companies probably have huge teams of people looking at the numbers. You do these things because your customers aren't buying your stuff. I mean, that's all there is to it. Someone's not buying Intel stuff. So, and then if they're saying, well, we're going to have 25% less sales, let's just say January, starting next year. Well, then it's better to be proactive to lose less money because you're going to pay a bunch of workers to build up a bunch of stuff that you're not going to be able to sell. Well, what good is that going to be for you, right, Joe? So these guys know what they're doing. They're going to, if they slash 10% or 20% of their workforce, that's because their metrics are saying we are not selling our stuff, and we're not going to sell our stuff, Joe.
Yeah, and I just think and again, I just think that these companies thought this was going to be temporary, that things were going to get better. They just had to, wait a month and things were going to get better. And now I think they're at the point where not only did things not get better, they waited a month, they waited 2 months, they waited 3 months, whatever it was. Not only did it not get better, it actually got worse. And now we're going to start seeing big axes flying. I think that's really what we're seeing with Intel. They probably should have been cutting jobs going into the end of last year and just kept delaying. And now you're seeing the big axes swing. And same thing with all the companies filing for liquidation, the bankruptcy filings. I mean, June was terrible. I can imagine how bad July is going to be. $20 gold pieces, 1 through 19, 26, 25, 20 or more, 2,600 at 800-951-0592. Jason and I will be back next week, but we're going to finish up with the half-empty cup. Join us over there. God bless everybody.